Good morning, everyone. Microphone check, screen check. Looks like everything's working here. Fantabulous. Welcome, welcome, welcome. Yeah, looks like everything's working. Last couple days have been kind of shaky in terms of the technical side of things. I feel like it's a 50-50 shot these days, but it looks like we're good to go. Either way, good morning, SSFTG family. I hope you all had a chance to rest up, get ready for the day ahead, all that fun stuff. As per the usual, make sure to read through the morning prep PDF and, understand everything that is inside there. It's very important. Awesome. Good morning, Ace. Welcome, welcome. Just a quick note for you all before we jump on in today. If you're watching on the YouTube side, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. And then, of course, like we do every day as well, I definitely want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the family here at SSFTG. If you aren't a member yet, you do have several different options to check out if you're looking to further your trading education and career. The easiest way to start out is just to join as a member on YouTube. It gets you in the chat room, a bit more behind the scenes in what's going on, or if you want more information on how we do everything, wow, that's loud, how we do everything in our trading approach with over 20 now hours of video course material. We just launched Unit 4, that is now open and ready to rock and roll for you. I also did some quality of life updates there. Either way, before we go down that rabbit hole, swing over to the main page at ssftg.com if you want more info there on everything that is available. So whether you're there for the very first time or you're one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, and kind of see what's going on for today. I mean, first off, before we jump into the charts, because there's quite a few things going on behind the scenes here, but I will preface today with something that's we were so graciously reminded of in the Discord chat room. Thank you very much, by the way, if you're in here listening. But today is quad witching day, right? So that's when stocks. What was I'll just read it right from there. That's when the stock options, single stock futures, stock index futures, and stock index options, they all expire all on the same trading day. It's the third Friday of the month, but it's the third Friday of the month of the quarter, and, well, it is September after all. So generally, when you're looking at quad witching Fridays, they are dangerous, is a fair way to put them. Now, as far as the news calendar is concerned, I mean, there isn't really much there, so it's primarily just on the backs of what the day is. So a lot of traders won't even trade today. Quad witching week, some traders won't even trade the entire week. That used to be me a couple years ago. Then, a little more recently, I would only trade like Monday, Tuesday, Wednesday. And now, for the most part, once things started calming down a little bit, it's been kind of consistent. But if the volatility starts picking up again, it could be a little bit crazy. We'll see. Either way, it is out there. It's Quad Witching Friday, so just know that. Don't forget to grab your morning DP levels. Those are posted for you on the main 7 markets that we take a look at. NASDAQ is a big old crude, Euro, Bitcoin, and Ethereum. I wanted to make sure to take a pause there so I didn't stumble on a Friday. I've been tripping over myself all these last couple mornings getting that out. It's a race every morning. I finally got her shoes tied, huh? Like I said, the news calendar is pretty light. There's not a whole lot going on there. Not a whole lot to worry about from that front. So let's jump in. As far as the NASDAQ is concerned, and really the S&P for that matter, this is obviously having some difficulty going to the downside. You remember yesterday we were talking about what excess proof looks like and what it means to be a late to the trend buyer and really, really late to the party and not wanting to be the first one, right? Like these traders were, and these traders were, and these traders were, and these traders were. They were also first to the party buying on the lows, and that time it finally worked. So I guess as long as your risk reward offsets 1, 2, 3, 4, 5 times, what does that put your probability at? A 2 to 1. So you got to make sure that you got to make sure that your reward versus risk is at least 3 to 1 if you're going to be taking that. It's just constantly buying off the lows, maybe even a 5 to 1. Obviously not the proper approach, and a lot of traders are going to be waiting for that higher low. What makes it even more interesting is if you can get an order flow to flip inside of there. So if we take this, let's see if it's bugged still. We've got an extra day, so it should work, right? Still doesn't work. Man, this thing does not like that day specifically. Let's go one more day. There we go. So like we were talking about yesterday, this seems like the market's trying to flush back and grab the POC, and that POC was back at 15,360. Well, job done. I think that's taken care of. Check mark. As far as the bullishness continuation off the lows, this is the area that we were talking about wanting to be longs on options, right? Calls, etc., out of the monies. Stuff that's, up here. Because again, the probability is bad, and you never know if you're going to be early to the party or late if you're buying on the first dip. But when you're waiting for way over here, now you know that you're late to the party. It's the first time that we've had a new high where they break above the top. It didn't do it. I mean, geez, they didn't do it by much. Now you'll notice the first time around, I gotta put it up here. Man, really? Okay. I'll just put my mouse on it. There. See? The line's too thick. But they broke above that high. So we know that as far as the low is concerned, this is the impulse low down to the base. I would normally measure there, but my data's bugged. So once that's created, the market, if it's going to reverse on a higher low, that's going to be the spot that it tries to do it on. And we finally had a valid attempt. Valid in the sense that they broke above a previous swing high. That is what is needed for a trend reversal, right? We've been talking about that for days now. That's what it needs. So given the fact that that was there when we pull back to the POC, that's where traders are going to look for the longs, and it worked. Now that we've got the continuation back to the upside, we're obviously transitioning a bit, maybe more range bound, but we are with the higher lows. They're getting jumbled up at the top. It's a bit of a concern. The bulls really need to launch pad this up through here, through the 550s, and they've got more resistance waiting just above. We've got a little bit of a fight on our hands. What might make a bit more sense here would be like a 3-press wedge base at the open. Right, catch a little low, maybe one of those, what we've been seeing more recently, one of those good old wolf waves, come back into play, reverse back up, something. But I just don't want to be a buyer way up here right now. The opportunity was on that dip. Now on the S&P, one of the big problems that we've been dealing with the S&P and still are dealing with is that it hasn't made that new high. It has not fulfilled what it needs, the prerequisites of a trend reversal. That hasn't happened. So with that lack of proof, right, we have to still, like we were talking about yesterday, err on the side of caution from the bull side and think more on the bear side. And yesterday that worked out beautifully. It was a bull failure, bull failure, bull failure, beautiful drive down, fantastic opportunities for swings even. So, I mean, once we got that dip down, what is the S&P bouncing off of? Well, the impulse POC is still way up in the stratosphere, but if we bring this forward and we look at the overall order flow across the entire thing, let's see what they've developed down here. Yep. Half the time you don't even have to draw this stuff. It's just so obvious. We've got a very obvious final dip. Wedge. All we're waiting for is the break. Unfortunately, the POC is right in the middle, and this is very early in the wedge. The majority of wedges and channels and patterns in as a whole typically break out when they're near 60 to 70% completion of the apex of the move. Meaning that if you were to draw that forward where they cross, where there's just no more room left, usually markets will complete their pattern about 60 to 70% of the way to that point. Right, so if we're looking at it from that perspective, then we got a long way to go. We got about until over here. Could just go sideways for a little while. We'll see. They haven't had that new high, so got a bit of a challenge. As far as gold is concerned, we know that they had that jumbotron move to the downside. We had the ABCD leg, which massively overshot, and like we were talking about on the way lower, we had that intention of looking for the L1 continuation to the downside. The L1 continuation, if we zoom in a little bit closer here, was incredibly successful. Worked out beautifully. It had to hit at 3 in the morning, of course, right? God forbid they hit it in the US session. But it did operate exactly as anticipated. It worked out perfectly, all the way down to the low closes. Doesn't have to make a new low. Remember, if you're looking at it from the perspective of an L1, then realistically, you're looking at a 2-to-1 objective, which has already been filled. Actually is being filled this morning right now on gold. So a lot of shorts who are shorting into that L1, they're looking for the continuation down. They've got their targets filled. It's, you know, unfortunately what we were waiting for all yesterday didn't show up, and it happened to show up at 3 in the morning today. But it's nice to know that it at least followed the rules, I guess, unless if you weren't able to participate in it. If you were, congrats. Worked out nice. Over on crude oil, we've got a continuation back to the upside after that gargantuan lift higher. And with this lift to the upside, this came off the trap on the low. And a lot of traders are going to be thinking, wait a minute, we've probably got the surprise move to the upside. We've got the POC in the middle that we were talking about, which was over right there. The data's bugged, of course. At this point, I'm just kind of getting used to it. We've got the order flow blow off up here, and this is giving us a zone of interest that the market is going to want to be breaking out towards as far as upside objectives go, into the 73.50s. So the market's trying to reach up to those 73.50s, but realistically, look at how this is moving. They're not exactly demonstrating a huge amount of consistency from the bulls' perspective here, and they left behind a major POC back at 70.47, and a lot of traders are probably stuck from there. So if it does want to reach back, the immediate first thing that stands out is, wait a minute. Oh, baby, baby, baby. We've got ourselves a 3-press wedge low directly on the POC. Now we're talking. All right, so these are the types of things that I really want to start stacking up. Anything else line up? Let's go along with this. We've got an L2 into a continuation for a follow-through, deeper pullback on an L3. Yeah, I mean, it fits the L3 structure. It's all right. It doesn't necessarily add to the context, except for the fact that the L3 is directly on that exact same spot. So, I mean, you can see right there. That's the spot. That's where I want the zone of interest to come in. We're pretty far away from that. So, gotta wait. Hey, good morning. How's it going? Welcome, welcome, welcome. Over on the euro, continuing to the downside, we've got a nice little channel working its way lower, and originally the channel would have been like this, right? Got that nice little channel formation. They blew off the lows, which usually if they blow off the lows, they equidistantly break off the highs, which is what they did. Rotated down, first leg down, second leg down. We've got ourselves a channel completion. This is one of the oldest textbook structures in when it comes to the markets in and of the whole. You got a channel, one leg down, two legs down, donezo. Now, that doesn't mean that the market has to reverse from here, but the fact that we're bouncing off the channel, we've got a break, we've got 2 legs down, those 2 legs down are almost perfectly measured. It went a little further, sure. I mean, that's the zone of support, back down to settlement, back down to that area. That's for bulls looking for a reversal, we don't have the proof of a previous confirmed swing, right? We never broke it. It missed it over here, and now we broke down to another new low. The last confirmed swing's way up here. So, I mean, in order for the market to actually reverse in trend, prove that it's reversing in trend, man, it's got some ground to cover. What would be honestly a lot nicer would be seeing this go down to another new low. That would drop a confirmed swing a little bit lower, and that would allow the bulls a bit more of a chance. I'd also maybe follow up with a nice little 3-press wedge there, too. So, it feels like the market still has a bit of downward pressure hanging on it. It hasn't really kind of eluded it yet. Or at least that's what it feels like so far. On the S&P, starting off on the bigger picture. Let's go out to the 60-minute chart, see what's going on here. Get rid of this for a second. First off, we've got our 5-wave cycle to the upside. Very, very obvious 5-wave cycle to the upside. And then we've got a 5-wave pulse lower. From there, looks as though the low is, I mean, realistically, anywhere around this area. But as far as the corrective phase goes, again, we haven't broken a new high. So if this is a correction, then we have to assume that this is a rolling correction. That's, you know, I mean, maybe it constricts. Maybe it goes into a wedge. Something like that. I mean, either thing. One thing's for sure, we're in the middle of it. So this is a really crap spot to be opening up in. I am not a big fan of where we're opening up. I would like to be down towards the lows or up towards the highs or break or something. This just being smack in the middle is a bit of a challenge. Zooming into the, you know, the more recent price action that's been going on, I mean, it could just be this. Really, really narrow, but I would like this to do. Honestly, if I had a choice, this would be it right here for the shorts. And the reason I like this for the shorts is this is the completion of the Bears 5 impulse wave, or 4 wave, previous 5 wave impulse retest of the 4th wave. Jeez. So somewhere inside there. And this would be a beautiful consolidation break retest above the highs, trap zone above the top, looking for the reversal back down. That's the spot, you know. Now, remember, from the top to the bottom, if we go all the way from the high, all the way down to the low and across, we've got the bulls from the bigger perspective who are looking to demonstrate support off of the previous wave's 4th, right? And that's exactly where we are right now. So do I want to be a short right now? Good Lord, no. No, not even close. But could there potentially be some really nice long opportunities? Yeah. Could there possibly be some really nice short opportunities? Yeah. Where we are right now? No. We're right in the middle. This is more option territory. We do have the POC down here at 49.75 short. There's a couple things in there that might be able to work out, but it was a mess. Zooming into the 15-minute chart doesn't help really at all. That just further confirms the wedge that we're stuck in. From the 5-minute perspective, we have almost no gap. Basically gone. The 2,000 tick hasn't really done much. We started off the day with a nice little, incredibly aggressive bull cycle to the upside, which just kind of ground out and kept going up. Obviously, there's no secondary completion of that. It looks more like it was a completion of the previous leg from yesterday. Either way, they started off with a little microcycle inside of here, which did end up, again, kind of grinding out and completing. From there, we've got another nice little aggressive cycle. Maybe. Wish it fit a little bit better, but nice little intermediary channel possibly playing out. And also, I've got this guy. You can see the problem. All signs point to down so far. Yeah, there you go, Ace. Hit the like button. Come on. Get it. Let the algos know we're here. The humans don't know it, but the algos do. And here we sit, kind of going a little bit sideways. Not a whole lot going on. Looking at some of the other things of interest, obviously one monstrous thing of interest is the fact that, oh, I don't know, Shiba went absolutely frickin' haywire. We had Shiba rally all the way from the 660s, 640s, where we were accumulating into and talking about it for quite a while. Arguably all the way up to the 690s, but sub 700s. Rallied up to the 950s for a Jumbotron move to the upside. Fantastic rally. In terms of the upside movements, where, I mean, even if you took it off of the top, you have about a 37% rally. So really, really nice bullish momentum that was going on there. And we're pulling back. We're pulling back to the previous POC. That POC is resting at the 800s. And if you look at it on the daily, that makes sense because that's also where we kind of broke out of from before, right? We're trying to creep our way through this zone. Can I add more definition to this? Maybe that's too much. Well, either way, it fits. And that POC is back down here at the 708s. So if this intermediary support zone at the 800s doesn't hold, then it's likely going to pull back to the next one in the 700s. And then we're kind of back to where we were on the breakout point. The majority of the rally, I think the profit taking, when you've got to swing into a new high in a 30% rally, it's kind of hard to not take something on that if you were looking for it as a day trade. From the launching pad of this potentially going that 16 bajillion percent that we've been kind of jokingly talking about, but kind of not jokingly, you know, then you're still a hodl. Hodl strong. But expect a pullback. Yeah, Shiba has a ton of zeros, and that's in USD. I mean, you're talking like you put $20. Well, I don't know about now, but before the rally, you put like $20 in. That's like 2-3 million coins, right? I mean, you're really stacking some serious coins because of how cheap they are. So yeah, I mean, it makes it a little bit weird, but a percent gain is still a percent gain. That's why I look at it in percentages, especially in crypto. Coinbase is talking Shiba now. You can buy Shiba pretty much everywhere. Even Webull has Shiba. Shiba Inu. Power to the people. That's all that play is, honestly. People. Don't believe in the people? Look what they did to AMC. Look what they did to GME. Trust in the people. Hey man, how's it going? I haven't seen you in a while. Doing well, doing well. Getting over a little bit of sickness over the past couple days here, but doing well. Hopefully yours is the same. Good to see you, man. There have been a lot of updates. If you haven't been able to tell, we just actually launched the Unit 4 of the Day Trading Academy. So if you're looking for something to do, we've got a bunch of new updates going on, about 20 hours of course material, and we have a VIP webinar tomorrow this weekend. 10 o'clock Eastern for you VIPs out there. Or if you're just swinging in, how's it going? S&P still grinding its way down. We got about 7 minutes until the open. Yeah, right now you're logged into it. So you're in the VIP room. There is a YouTube variant, which is it does have a little bit of a delay, but there's a YouTube variation as well. The big perk, obviously, with VIP is that there's no delay. So from a scalping perspective, makes it incredibly more beneficial. But at the same time, you know, there's a lot of different options. Basically, my goal is to make the argument of like dollars and cents and not being able to afford any kind of education a complete non-issue. If people can't afford a full-on, you know, crazy expensive plan, then there's also the YouTube option. If they're looking for an alternative that maybe isn't, I mean, I've seen some of these things are insanely expensive. I mean, even if you look at some of the packages that we offer, like the APN Plus. The APN Plus is another one of those things where it's putting the power back in the trader, you know? It's... Bulls more continuation after a little bit of a trap on the base. Likely going to be building POC volume up here, right? Yeah. 44.61 quarter. 15-minute bulls still migrating that bounce off of the 44.49.75 zone of interest. As far as the 5-minute perspective, we're climbing away from the RTH gap a little bit. We got about 4.5 minutes left. Market's stalling out just a little bit. From the NASDAQ perspective, we've got, I mean, man, just kind of a grindy mess of a pullback. Big old wide channel. $9.28's the next big time slot right around the corner. Remember, it's non-farm payroll Friday, so today the aggression pedal is either to the floor or way away from the floor, right? There's only two options here, because it's going to force you to have to take some risks that you may not be comfortable with on days like today. And it's going to make you do it with like 2 seconds to figure out if you want to do it or not. So you better be prepared. Get the caffeine going, find your zen, maybe meditate, whatever your thing is you, but... And also, given that it is non-farm Fridays, you know, again, I don't know how many swing trades we're actually going to locate today, but the probability is automatically going to be a hindrance. We're starting off with more wind against us today than anything else. The probabilities are still there, but you really got to make sure that you're honing your entries. $9.28 is here. I'm going to look for this little flush to be actually a little lower, 58.50. I don't believe this move down, and I think this is a pre-market dip for buyers to try to accumulate into a little drop. I tested my entry, and... Okay, I was going to say, it didn't make it up to the target. Is that 50? I don't like how that POC is right in the middle of it. That kind of sucks. I think I'm going to have to optimize my exits a little bit here because of the way that that's moving, and just accept the fact that right there is probably going to be good ahead of settlement. I like that dip for a scalp, but I thought I could get away with my entry in the right place ahead of that POC, but my math was off. So I've got to treat it differently and just take the scalp as an exit. I was wrong on my call, so no reason being in it for more than what was anticipated, at least. 9:30 open right around the corner. I say wrong, I mean it bounced per, you know what I mean. My math was wrong. $10 seconds. Market opening with a gap to the downside and beginning to drive lower. Previous zone of support for the bulls on that launching pad was at 44.50 quarter. Realistically, the engulfing entry actually took place at 50, though. Also, looking at yesterday's rally from the bottom to top, the impulse POC's at 43. Yikes. Wow. How's it going, NASDAQ? Big flush to the downside. Perpetual continuation. S&P bulls trying to get this pulse to the upside. Remember, we are coming off of a major zone of support, and buyers may be buying into this dip here a little bit, but we're still in a major range. Nice little trap low bounce for a scalp so far. That's about it. I'm having a hard time believing the sellers, I gotta say. I mean, I want to believe the sellers, but I'm having a hard time believing them. Looking across the field here, we don't have a whole lot else going on. The S&P's got a nice dip back to that 44.49.75. I still think that this is a very nice spot for potential option plays, out of the monies, reduced risk plays, etc. But as far as like a futures play, maybe a little bit not so much. It's a non-defined entry point yet. We don't have a new high. We don't have anything to work with. And the sellers are still demonstrating that they have a very real potential. Sellers may even be selling underneath that most recent bear bar. Just like I said, I have a really difficult time believing the sellers right now, so I'm not going to take that. But it's there. Let me get yesterday's POC and stuff off of the chart here. RTY as if it's a loan, yeah. I mean, out of all the markets, though, to act like that, at least it's the RTY, you know. Oof. Okay, now a lot of sellers will have gotten underneath that short with that secondary bear bar, and a lot of sellers just got just obliterated on that last POC. Yikes. Last impulse, yeah, I didn't get a fill. I wanted to see if I could get a small little inside pullback, but I just kind of ran away. Back up to settlement again. So far, bear trend still intact. From a 5-minute perspective, we're up to settlement, bouncing off with a 5-minute POC resting at 44.55 and holding underneath. Trying to get that bounce going for a little more continuation or a lack thereof or something. We're kind of in the middle of nowhere right now. The one thing that stands out is that this is where the earlier shorts would have gotten in and then immediately ran over. So the fact that it's dipping back here and bouncing here, my first assumption is that those shorts are exiting. That adds more wind to the sails of the bulls. He says as the Nasdaq's pushing the lows. But it does, you know, being that the sellers would be out of the way, getting out at break even, who's going to push the market further? They're going to have to find more sellers. Maybe these bear bars will find them. So far on the Nasdaq, 15,450 is the 5-minute POC. And 44.55 on the S&P. Relatively bearish bar to start things off with a POC back. We have a rejection off of settlement, but again, there's nothing really to hold the market up. I have a really hard time believing this area, I gotta say. See if we can get a small little inside correction back to the POC. Zone of support would be inside. I mean, it fits. Might even be able to squeak away an extra couple inside there. I'm gonna try. Hey, Steven, how's it going? So far, we've had the one scalp on the S&P. That's it. So, not a ton. Market's just kind of grinding. Looking like maybe they're creating a bit of a wedge now. Ooh, nope. Now I got to cancel my short. The POC shifted down. I can't. My entire basis for the short is gone. All of my defense just said, nah. Okay. Guess I have to as well. Starting to push back down the previous bull's launching pad, as well as the previous bear's crash test dummy wall, where they got stuck from. I don't know what you want to call that. I'm sure there's a technical term. But we're starting to dip into that zone, and the fact that the POC is pushing down here and the market's having a hard time getting below it, we've got some clues. Man, gotta get them hander pants. I'm always cold, man. I've got the circulation of a 190-year-old. I mean, it's ridiculous. I might as well be a mummy at this point, as far as my hands are concerned. My feet and my hands are always cold. Always have been. Like, it's just always been that way. It doesn't help that I despise the cold. I know I live in the wrong state. I don't have a choice. It's funny, though, because the rest of my body's a furnace. Florida is one of my favorite states, personally. I absolutely love it there. The weather is my kind of weather. The humidity, it doesn't bother me. I love being hot. That's totally fine. The problem is that heat bothers everybody else in my family. So... there's a bit of an issue there. Trying to find some middle ground that still has palm trees, it's kind of difficult, you know? Did you remove the sell because the POC shifting down earlier indicates sellers getting out, or it could be sellers re-entering more? It could be sellers re-entering more, but if that were the case, they should be able to close underneath 5150. They still have 50 seconds left. There's too many 50s here to close underneath it. So it's still a possibility. But the fact that the POC was at the top and shifted down really is something that would be like, I don't... It puts me on edge. Hey, how's it going, Duncan? It could be arm. You know, I've tried everything. And like I said, it's not been like a recent thing. It's been that way since I can remember, at least a decade, if not more. And through that time, I've been through a lot of different chairs, different adjusting things, and all. I don't know why. One thing we were talking about yesterday, though, NO2, nitrous or whatever it is, not the funny gas, but the other one, to increase blood flow. That might be an option. Of course, then the rest of my body is going to be sweating like... All right, like that, right there. Perfect example, Stephen, what we were just talking about right there. 44.51.50, the sellers closed underneath it. That's what they need to see. Now, they need to hold it. They have to stay underneath it for them to maintain. But same with the NASDAQ, the POC shifting to the downside. We've got stuff like that. I have not tried an exercise ball chair. No, I haven't. But, see, the thing is, I have kids and a cat and a dog. Those don't go well. Whoa, Mr. Hey, how's it going, PD? Yeah, we've got a for the going into quad witching, knowing that this week is going to be a little bit of a train wreck, including last week Friday because this past weekend was my birthday. I wanted to have some fun and trade on the S&P for a little while and just kind of scalp around. So that was the idea. I still have them behind the scenes. I've still got my normals, but. Are your eyes burning yet? We've got the POC shifting to the downside. Normally, I'd be looking for a continuation to the downside for selling above this previous bear bar, but with the POC shift down, that makes me concerned. I've lost my reasoning to believe the shorts, and in fact, if we look backward, we have the previous bulls defending their positions, closing above their entry points. There's a lot of red flags as to why I should not short here. And you're seeing all of them play out. I was just typing, I need some cheap sunglasses, yeah. Well, if you're going to buy some cheap sunglasses, go to Dollar General and see if they have the yellow ones. They help support children's literacy, and they're like $2. So, good cause, and they're dirt cheap. Usually have like 7 or 8 pairs of those laying around. We stock up on them, kids, you know. We have a Dollar General near, and every time I go in there, they call me Mr. Literacy because I'm always like rounding up, doing the donations, getting the glasses whenever they're there. This. First 5-minute POC potentially rejecting off the 44.55 and trying to push back down. 44.51 quarter POC on the lows. Me too, all mine just burned up in my truck for sure. You know, see, back in the day, like 10 years ago, I'd be all about like, yeah, buy these Pradas, buy these Oakleys, buy the, you know, this name brand stuff. And then you have kids. And you realize, man, it's real easy to flush $1,000 down the hole when you have kids. it's like, wow, there that goes. Cool. Gone. Hey, Maurice, how's it going? Yeah, the POC, you will find that in the Academy in Unit 2, predominantly. It'll go over it a little bit in Unit 3 and some at Unit 4, but the majority of it's in Unit 2. Along with that, of course, we talk about it day in and day out, so if you ever have questions, I'm here as well. But yeah, it is talked about in Unit 2. The chapter off the top of my head eludes me at the moment, but... I want to say it's towards the bottom, maybe like chapter 12, 13, something like that. POC shifting up back to the original 44.54 and hovering. POC on the NASDAQ holding it around the lows and not really doing much. One big thing that does stand out, although it is using the pre-open candle, we have a lot of candle gapping to the downside. Because it's using the pre-open candle, though, not as interested. A little less on the probability scale there. Sellers demonstrating some nice pushback here on this bull bar. Or lack thereof. See if we can get a continuation sell to the downside at 2/4. Canceling. That POC just shifted right back down again. Nope. Alright, these POCs are too close to one another, so I'm going to assume that this whole area is one POC now. Otherwise, it's going to be too difficult to kind of delineate between the two. So this whole zone between the two, those two is just one big one now. Well, I mean, it's... You know, I totally... I feel the struggle, Steven. I feel it. You know, it's like, damn, come on, man. Just... What are you doing? But at the same time, it's also giving us some precursory warnings and keeping us out of trouble. So it's maybe a blessing in disguise. Until the bottom rips away and it's down 70 points and I'm punching holes in my desk, you know. But get back to me in about 20 minutes. We'll see. Yeah, I went back through the Academy as well in adding Unit 4. I went back through and I added a bunch of new icons. I remade a bunch of new icons that fit along with all the other ones that I made. It's a lot. There's a lot more quality of life stuff. It looks pretty good. I think it came together pretty nice. Market rejecting off the top POC. Now, arguably, if you're aggressive, you could be looking to sell that top POC and push back to the lows. There's enough room for a point in between the two. Not really any candle gapping. Not really anything happening. Haven't made a new low yet. Haven't made a new high yet. Still stuck in the middle. We're right back on top of the major POC on the 15-minute at 51.25, which has changed, but again, it's bouncing around between these few. Generally, it's in this area, though. S&P versus the NASDAQ, getting a little bit choppy. Well, and that's the thing, too, in what we started off this morning with. It's quad witching. So it's quad witching Friday. Today's already challenging, you know. I feel like we're seeing it reflected in price, too. Minute 40 left on the candle, trying to get underneath this previous POC. Sellers are demonstrating their resistance above the highs and pressing back down. Yeah, I would agree. The NASDAQ feels like it's kind of slipping. My concern from a low probability but a massive reward perspective is that buyers will be hanging out underneath this low with a stop underneath the base. Like I said, the probability sucks, but the reward's like a 10 to 1. So, I mean, there will be buyers who are going to be initially defending this low because they know that probability, it may not be good, but the reward is worth it. Yeah, there they are. So they got to get through those buyers. Looking good. There they go. Well, they didn't break the low yet. Come on, NASDAQ. There they go. Okay. Jeez. It looked like the bulls were going to revenge it back up again. They lost it. S&P breaking down through the 51.25 pretty aggressively away from it, but 40 seconds left. Getting a little bit far down here towards the bottom of the channel now, although to be fair, the top of the channel didn't exactly hold, and this is more of a wedge now, but that bull channel didn't want to do a thing, huh? All right. Excuse me. You grabbed the short. Nice work, Duncan. Good job. Now we're starting to get some candle gapping to the downside. These bear bars are starting to stack up. They're stacking up way far down here, though. 45, we're getting some distance. 46, 47. I would rather look for at least a 2-point offset. I like the downside continuation. We're not bouncing off of a zone of support, so realistically it should still continue to the downside. But I don't want to sell at the bottom. I'd rather try to opt to get a slightly better price, if possible, while there's still a gap. The gap that I'm talking about would be between these. Getting back down towards those lows. A lot of support down here in the 41 quarters. I still don't mind this because there's about 4 minutes left on the candle. Plenty of time. Exactly, Duncan. That's the good way to think about it. Not done until it's actually done. Looking across the field here, the gold continuation of the downside did follow through the L1 perfectly. Worked out beautifully. As far as the break through the 51 quarters now in the POC for the 15-minute S&P, we're there. NASDAQ still hunting back for the 15 360s, although it's already had support there. If it gets back there, that could cause some problems. Euro's also starting to dig back down to the lows. Testing the half DP to the downside, finding a little bit of support there. Downside candle gap targets at the moment, 35.50. Two and a half minutes left on the candle. NASDAQ jumbling around, not really getting a whole lot done, though. Malik, yeah, that's all explained in the Academy. So if you look on the main page of SSFTG, that's where all of that's talked about. It's in Unit 2, Chapter 8. And subsequently after that, of course. Yeah, no problem. Sellers continuing to the downside. They got a minute left on this, and they're still just slamming this thing to the downside. As far as a residual trend lower, starting with just today, not looking at yesterday, but just today, we've got an L4 exactly. So this breaking down off of an L4 is anticipated to have an L1 continuation to the downside, and that kind of lines up with what we're looking at already. Got about 5 minutes until we move into 10 o'clock. Feel free to get those questions in. At 10 o'clock, we'll move over into the extended session for members and VIPs and all that fun stuff and see if we can find a couple more scalps. All right, obviously not going to get that fill, so cancel those. Candle gapping is not confirmed, but in 15 seconds it will be. $46 quarters if they can get a little bit of a pullback. Also noting that we're starting to get some upward candle gapping from close to open. Yeah, if these sellers start climbing down too far, it's going to take away all of the reasoning for the shorts. Right now, they still have open objectives. But if they close all of the objectives in one straight move, then what other reasons are there to sell anymore, you know? That could be the case, but... I wish I could get that to fit better. I like this one a lot more. It still looks like crap, though. It doesn't matter where you put the channel. I guess that one for right now. trying everything I can to get this channel to fit. I think that's about as good as it's going to get, though. Bears still have open objectives to the downside, but again, it's forcing sellers to sell super, super low, and it's not really allowing any corrective phases. That's fine. If it's going to go without me, it'll go without me. I'm not going to risk selling down here because of FOMO. It's not worth it. But we do have a nice continuation down. Oh, technically, that didn't hit the L4. Okay. Interesting. Bears still stacking. And they do have another candle gap here. So if they can keep this open, then that widens things out a little bit. Market's just kind of fiddling around, not really doing a whole lot of anything, but grinding its way down towards the objectives. Unfortunately, fortunately. I would really prefer this to not hit that target, but, well, doesn't seem like the market really cares. I'm trying. I love that my only trade this morning was a long, successful long, on the low. Looking back on the day, like, wow. Yeah, exactly. Seriously. All red, one green, remove the mouse battery. I love it. Still going. Whoops. I moved my... There we go. You had 2 long scalps off the first POC flip? Nice. Don't you love it? All right, well, not getting a fill on that one. Open candle gapping is there, but... Now we're going into 10 o'clock. So let's get those last questions in for the morning session, then we'll flip over into the extended session. Looking at this week as far as the overall trading is concerned, because we jumped across different markets, let me see if it actually shows up the right way. Yeah, not even close. So we're going to have to do it market by market. That's not frustrating at all. So just the S&P then. All right, so the S&P for the week, 38 total trades, 73.68% accuracy. Average winning trades 10, average losing trades 6. So a 1.76 ratio, not too bad. All things considered, for the S&P. For the NASDAQ we had swing week, and I don't think any, or some of them worked, but definitely not enough of them to make it a worthwhile week. Yeah. So from the swing perspective on the micro NASDAQ, we've got 30 total trades with 46.67, average winning trade 35, average losing trade 68. That's just because we didn't have any runs. We got the first scalp targets, and then none of them took off afterward. So from the swing side, it's a losing week. From the scalp side, it's a great week. Good old probabilities. Which probably means next week's going to be great for swings and a little more difficult for scalps. It's usually how it goes, right? Anyway, we're after 10 o'clock. I'm not seeing any questions coming in, so overall, I mean, it was a really solid week, all things considered. The swing side of things had some difficulty getting any runs going, which is fine. It happens. As far as the scalp side had some really good runs. Yesterday had a really nice drop to the downside. So, I mean, it is what it is. Good week overall. If you're going to hang out for the extended session and your scalp shorts are over 3, yeah, for sure. And keep in mind, that's a week-long average, so some of them are less, some of them are more. But not too bad. Either way, that's going to do it. If you're hanging out in the extended session, or if you're on the VIP side of things and just listen to me babble to myself for a second while we transition, and look for the link in the Discord chat. I've also been posting the YouTube members link in the communities page, so you should be able to find that link in there too, just to make it a little bit easier for you. Otherwise, though, if you're ducking out for the rest of the week or going into the weekend, make sure to take some time off, right? Get away from the markets. I know, right? It's super easy. We're all addicted. It's super easy to dig into charts and analyze, and before you know it, it's 3 in the morning and you haven't slept yet. And don't let that happen, right? Use the weekend to get away. I mean, I know we have a weekend webinar tomorrow, so there's an hour of work, I guess. But, use at least a day where you've got some rest. Do something else. Go for a walk. Do a hobby. Something. Because, remember, we make more decisions in a day than most people make in a week. Right? We've got to give ourselves some mental rest so that we're ready to rock and roll come Monday again. So, enjoy, rest up, and we will see you all back on Monday, all right? And for the rest of you, if you're hanging out, we'll see you in the extended session. All right. Have a good one. We will talk to y'all later. Thanks.